Hey guys, Akil Stokes here, Forex trader and trading coach over at tier1trading.com, and welcome to a special trading video. Consider it an early Christmas present for you. But what I want to share with you guys today is an interview I did with my buddy Etienne Cret over at desiretotrade.com. Now, it's about a 45-minute interview, so I can completely understand if you don't have time to watch the entire thing. I recommend doing so, but if you don't, if you're watching on YouTube, just click the description box below and there should be a list of each question. And if you click the timestamp next to it, it'll take you directly to that part. That way it'll save you guys a little bit of time. So without further ado, here goes the interview. And as always, if you have any questions or comments, feel free to leave them below. Hit that like button, hit that share button, and I'll see you guys in my next video.
So welcome, Akil. How's it going today?
Hey, thank you. Everything's doing good. Can't complain. A beautiful winter day here in the northeast of the U.S. So I'm happy.
Let us know. Yeah, that's good. We have Michelle who just joined us. So welcome, Michelle. Welcome. We'll do kind of a Q&A today. It's going to be on different topics, so a lot of things. And I want to talk about two things specifically. So first, advanced pattern, something I know almost nothing about, and I know Akil knows more than I do about that topic. And then we'll get to your questions. If you have any question, comment in the chat box, and we'll make sure to answer whatever question you have today. But maybe, Akil, I know some people here, probably they're going to know you for a long time, and they're aware of everything you do. But for those people who don't really know you, could you introduce yourself a little bit? Tell people what you trade, how you got into trading a little bit.
Sure. I kind of went through the same path that many of you guys did. I started off as a struggling trader who was, vulturing around the internet looking for any bit of information I could, and someone that struggled for a long time and learned a lot of expensive lessons in the market. And eventually I fell in the right place. I got educated, and it was still a long journey afterwards, but I was able to turn myself into a consistently profitable trader. And now, really, since I've gone through kind of all of the obstacles that a struggling trader goes through, it's made me a great educator. So I now coach and teach traders as well, and help them become consistently profitable as well.
Nice. And what would be, let's say, your trading style right now?
I would say that I'm a price action trader. I've kind of taken a step backwards. So I've started with, obviously I started trying a million things on my journey. I tried every new shiny thing that I found on the internet. But once I settled in with a trading style, I started with advanced pattern formations, which is what we're going to talk about today. But over the past probably 3 years, I've kind of worked my way backwards, and really I've fallen in love with the classic and simple trading techniques, simple structure-based trades, simple pullback trades. So really I would consider myself a price action trader. Not a lot of indicators, no mechanical bots or anything like that. Just simply being able to analyze a price chart, being able to identify and create a story for what each candle means, and really turn that in a way that gives me an edge in trading the markets.
Mm-hmm. Cool. I think that's a fascinating topic, and I think it involves kind of a lot of things. Sometimes people look only at, let's say, candlestick or only like one thing, but you really have to combine a lot of things to get a feel of price action.
Yes, I agree.
Yeah. So I'm curious to know the transition of from going to advanced pattern to price action. But before, maybe we'll jump to advanced pattern. So what are advanced pattern in general, and what can people expect when they start to trade that?
Well, advanced pattern formations are essentially pattern formations that can be traded when the market moves in a series of waves. So especially when the market is in consolidation, the market tends to put in these 5-wave or these multiple wave patterns. And when done in a specific way, and when each of those waves hits a specific Fibonacci level, it can create some pretty powerful trading opportunities. One of the things that I love about advanced pattern formations, and I notice a lot of traders flock to it, is because the rules, at least the way I teach them, the rules are black and white. So we all know there's a lot of subjectivity in trading. We can have, everyone here right now in the chat can be looking at the same price chart, and we can all be seeing different opportunities, and that's okay. I mean, that's why price moves. If you think about it, if we all agreed on everything, there would be no movement on a price chart. Everything would just be at the correct price. But that subjectivity to a new trader, it really gets them into trouble because of something called confirmation bias, because they're not confident in how they're trading, because they're not confident in their skill of reading a price chart. They tend to go to other sources such as maybe Bloomberg or a trading forum, trading view, maybe a hot trader on Twitter. And it's very easy to get influenced by them. And instead of seeing what they're supposed to see, they have this thought in the back of their mind, and well, really subconsciously, they're only looking at ways to appease that thought that already exists, and that can be troublesome as a trader. So one of the best things about advanced pattern formations is it's a set of it follows a set of rules, and the way I teach it, it's black and white rules, meaning there's no gray area, maybe aside from the initial starting point of the pattern formation. But it's very rule specific. If this, then that, right? If price goes to this specific level, then look for this. If price hits that specific Fibonacci level, this pattern is valid, this pattern is invalid. And a lot of traders fall in love with it because it takes away that subjectivity. It gives them something really definitive to trade, and it helps get them on the path of rules-based trading.
Mm-hmm. I know there are like hundreds of patterns, or maybe not hundreds, but a lot of them. So are they like 1, 2, 3 that people tend to focus more on, that you would recommend people to start looking to a little bit more?
Yes, and there are lots of patterns out there. I've even fallen across some new ones I've never heard of. I heard of a swan pattern the other day, which is for the first time. I prefer to trade pattern formations that work with my overall philosophy for the market. My overall philosophy is that structure is important, meaning everything that I do in trading, every type of trading decision that I make is based off of structure, because I really believe structure leaves clues. Structure acts like a magnet. Structure is where price has pivoted in the past, and it should be a level in which price should respect in the future. So there are certain patterns. For me, I trade the Gartley formation, I trade the bat formation, and the cipher formation, because all three of those pattern formations complete within structure. So if you can imagine a starting point being up here, right, the completion completes either right at or below that starting point. And that starting point is always going to be a built-in level of structure. So being able to trade a pattern formation like that allows me to stay true to my philosophy that, hey, structure should hold. It should be a safe place as far as putting stop losses. Putting my stop loss above structure should be safe. The pattern formation that I stay away from are stuff like butterflies, crabs, and sharks, because they complete, if this is our starting point right here, they complete beyond the starting point. So it really goes against my philosophy. Once I see that a level of structure is broken or is violated, that shoots off a signal in my head that says price should be continuing higher. So to be in a position where I'm getting short when the market is telling me that price should continue, or when the opportunity is telling me that price should continue higher, you can see the conflict of interest right there. So I just decided to stay away from those type of pattern formations, and not even give myself the chance to make any type of psychological error or anything like that.
Cool. And I remember that's something we talked about the first podcast we did together, first interview we did together, about the fact that people had to rely on like what they're comfortable with and what is kind of more natural to them.
Yeah.
Which is really important. Yeah. And what happened for you to transition from patterns to non-price action?
Well, a few things. One, I'm very passionate about trading, meaning that, and I believe you have to be passionate in order to be successful, meaning, yes, I care about making profit. Don't get me wrong. My goal is to make as much money as I can in life. Let's just get that out the way. However, I would still be trading even if I weren't profitable. And that's going to be tough for a lot of your followers to swallow. But I know it's true because I traded for so many years and I wasn't profitable. I traded so many years consistently losing money, and, either crazy or stupid, I still continued to do it. And I really have a passion for trading, meaning it's for me, it's a way to make income and feed my family, of course, but it's also a puzzle. It's a puzzle that I know I will never completely figure out. But at the same way, that's what drives me to come back into the market each and every day to get a little bit closer. So I love the game. And as a student of the game, I'm always looking to increase my knowledge, meaning I'm not looking to become comfortable with one type of trading strategy. I'm always looking to learn more about the markets. I'm always a student. I'm looking at some of the world's greatest historical traders and seeing what they're doing. And I'm always trying to evolve my trading style. And on this journey, it sent me back to many classic chartists, meaning many traders that were just, doing classic charting techniques such as, pullback trades, such as double bottom, such as head and shoulders, stuff like that. And the more time I spent in front of the charts, right, the more I fell in love with just the story that price action tells and being able to decipher the market's action in that way as well. So that's one way. Another way was just really was just kind of hedging my bet, right? Diversity. Advanced pattern formations are good. They work well, but they mainly work during consolidation, during periods of consolidation. So during periods where the market is moving sideways. However, that leaves us out of luck when the market is trending, right? Because it means that advanced pattern formations are getting their butts whipped and we're getting stopped out. Now, you have a lot of traders that would say, well, why not only trade them during consolidation and why not avoid them during trending periods? And that would be great. But in reality, we don't know that the market is trending until, well, it's already been trending. We don't know that the market is in consolidation until it's already consolidating. So it's a little bit hard to say that, well, I'm going to stop trading them now and start trading them again. It's going to mess up the consistency. So I actually ran into a month of trading, the month of September, which was my arch nemesis. I consistently got blown out the water, I think 3 years in a row in the month of September. And the main reason for that is because traditionally September is a very directional month. So as the market is trending and moving directionally, me and my advanced pattern formations were getting blown out the water. So I was looking for a way to really kind of soften the blow in September. And as I started implementing more trend trading opportunities, more pullback trades, it gave me a way to be profitable during those directional months as well. And it really gave me, again, more diversity in my trading strategy. That way I can take advantage of both types of markets.
Mm-hmm. Cool. And we have some people right now watching. I know NTV Game, we have Scott, I think Michelle also, that are at this point where they want to kind of create a strategy, or they're not exactly sure what to trade. They know like a lot of things, but they're not sure like how to put everything together. And that's probably what you had to do, put many things together. And that's what I did as well.
Yeah.
So how did you decide at first you had a good strategy, but how did you came up with it at first?
Well, as far as like the price action strategy goes, or just in general?
Yeah, I guess in general, yeah.
Well, you want to pick something that works for you. So there's millions of strategies out there. There's millions that work. What's important is you pick something that you can follow, meaning something that you believe in, something that is natural to you, because the more you believe in it, the more confidence you're going to have in not only the system or the strategy, but the confidence in yourself to execute it day in and day out. I found that when you're trading something that you don't necessarily believe in, you start to second guess yourself, especially during those periods of drawdowns. And those periods of drawdowns are going to come no matter what you're trading. So if you're a trader saying, hey, I'm just not going to have a period of drawdown, you're wrong. We're all going to go through those stretches where we just can't win to save our lives and we feel like the scum of the earth. And it takes a lot of confidence to be able to trade through those periods. So first, you want to trade something that works with your trading philosophy. You want to trade something that you can actually execute as well. So something that is easy for you to identify in the market and easy for you to take. And then, of course, once you settle on that system, you want to do your due diligence. You want to make sure you back test it, meaning look at historical data and test how that strategy trades through different market conditions. So trending periods, non-directional periods, high volatility periods, low volatility periods, and see if it's something that can stand the test of time. And during that back testing process, you're probably going to make little filters. You're going to add this, take away that, do this, do that. You're going to tweak your rules. But hopefully by the end, what comes out is something that works for you. And then after that process, of course, you want to demo trade it, because you'd be surprised. Some strategies work well in back testing, but can't actually be executed in real time. I've had a handful of strategies like that. But you also want to make sure that you can identify the opportunities live. It's a lot easier when you can scroll back on your chart and be like, ooh, missed one. Let me go back. I would have taken that. Where in real life, if you miss the train, that train is gone, and that can cost you a lot of profit.
Yeah, I like it. And do you think it's possible for people to create a strategy that's really systematic, but that can be applied on many pairs? I know this is a challenge that I've had with some of my students, that they kind of practice something with one pair, but it doesn't work at all on other pairs.
I do. It's possible, certainly possible. Now, each pair has its own personality. A trading buddy of mine, Jason Greystone, said it like this, where you think of yourself as the boss of your trading enterprise, and each pair is an employee. Well, when you're a boss, you got to understand that each person is different. You can't motivate, inspire, and talk to each employee the same way, right? Or just like a coach. You got to really gear your message specifically to that person if you want to get the most out of them. And pairs are the same way. You're going to have some pairs that are very directional, and they're going to work really, really well with trend continuation strategies, and be horrible for any type of, counter trend strategies or advanced pattern trading. And on the other hand, you're going to have pairs like a good example is the Aussie Canada, phenomenal, right, with pattern trades over the last 3-4 years, mainly because that pair just kind of goes sideways. So there's not a lot of directional movement, and it offers a lot of good pattern trading opportunities. So there are, the more you get into price action, and the more diverse you become as a trader and being able to take, trend continuation trades, counter trend trades, the more you can really attack any pair, because you have a way to deal with whatever the market is doing. But if you're starting off with a single strategy, and that single strategy is built for a very specific type of market, it's very important that you do your due diligence and you test it on each given pair, because some are certainly going to work better than the others. And a lot of mistakes that I see traders make is they test it on one pair, and then they assume that's going to work on 20 others, and then they're upset when they realize that they're losing money, all because maybe 2 or 3 pairs are killing all of their profit from the other pairs. So you got to do your.
Yeah, totally agree with that. And I see some comments on that topic, but yeah, totally agree with that. And that's honestly how I started to backtest on one pair and expect my strategy to work on other pairs, but it didn't work that well. So
You're not alone.
But I see no problem with having like one strategy on one pair and then adding more over time. I think that's totally fun as well.
Yeah, I think that's the best way to do it. Master one, have something that can make you some profit, and then while you're making profit, start working on the next one. Best way to do it.
But then there's going to be maybe a problem of getting organized and having these maybe checklists, because if you have 5 strategies, how do you keep track of those 5?
It's tough. You have to be organized, and you have to take, and you know this, you have to take trading seriously. Trading is a business. And, if you're not serious, if you think you're just going to wake up at any time of the day and randomly put on some charts and find trading opportunities, you're wrong. You have to be very organized. You have to be very direct. You have to develop a ritual and a routine, right? You think about it like any other job you would go to. You just don't, well, for most of us, we just don't wake up and clock in wherever we want, right? You have to be at your job by 9 o'clock. You have to be at a meeting by 10. You have to have these reports done by 11. You have to organize yourself that same way in trading, where you have a set routine of, this is when I wake up. This is when I do my pre-market analysis. This is where I take notes. And the more organized you are, the less opportunities you're going to miss. And it really becomes treating it like a business instead of just a hobby. And that's something that every trader has to do if you want to see consistent success. And it's hard because there is no boss. No one's sitting behind your back saying, hey, Johnny, you got to do your analysis on that pair right now. You can do what you want, which is it's a blessing. Don't get me wrong. It's a blessing to be able to do what you want when you want. But it's also difficult because there's no one there to discipline you. There's no one there to keep you on track. So that's why I always encourage that traders find some type of community, right? Some type of situation where they can surround themselves around other like-minded traders, because sometimes just a little message from George saying, hey, just got done my top-down analysis. Sometimes that's the bump you need to be like, yeah, I should probably start doing mine. And that can help massively in the long run.
Yeah, and that's where I see the power of a coach or just a community as well. Just can be powerful for sure. Cool. And we have Jeremy asking, how do you deal with the noise in the market? So is your system kind of made to not be affected by the noise? So like big variations, or how do you deal with that?
It's tough. In general, the market's goal is to bring as many people as much pain as possible. So that's the market's goal. Its goal is to hurt you, to scare you out the markets, and we know the fail rate in trading. What you have to do is really be able to see through the noise. I think of the market as being like a magic show. I don't know if you guys have ever seen like a magician live, but when you have these magic shows, right, it's a big thing going on. There's smoke in the background, there's noises, there's lights, there's the pretty girls walking across the screen, and then there's a million things to distract you. And underneath all those distractions, right, the magician is doing his little sleight of hand trick to fool you. And that's what the market will do as well. The market's going to show you all of this bright, shiny stuff to try and distract you from what's really going on. However, if you have a process, right, and I go through a process called IPDE, identify, predict, decide, execute. If you have a process, if you know your trading plan, if your trading plan is rules-based, meaning that it follows like an if-then thought process where you're treating yourself like a robot. If I see this, then I look for that. If the market does this, then I should expect that. If you're treating your trading in that way, it's going to be easy to really separate what matters in the market from what is just a distraction. And it's going to keep you out of some of those silly, dumb trades where you take them and you look back like a day later and like, what was I thinking? Why did I enter that? It's going to keep you out of some of those. And I'll tell you what, the biggest benefit in my trading was addition by subtraction. I started becoming a lot more profitable after I eliminated the dumb stuff that I was doing. It wasn't necessarily trading better. I do think I'm becoming a better trader. But the main thing that helped me was I stopped giving profits back to the market by making dumb little mistakes. So you got to ignore the smoke, ignore the pretty girls. I know it's hard, but focus on the magician, focus on the trick, focus on your focus, on what your plan is and what you're supposed to be looking for.
Mm-hmm, mm-hmm. I'm glad you mentioned this, and I'm glad also you mentioned the power of a trading plan. Mm-hmm. And I literally see, I see often people having on a trading plan something like confirm with price action, which doesn't mean anything by itself. So maybe could you guide us through like one of your thought process of like what kind of rules are good and not good, perhaps?
Sure. Again, you want to be as specific as possible. So I'll take you through an example of a simple, let's say a trend continuation trade. So the first thing I want to do is, again, identify, IPDE, identify, predict, decide, execute. Identify, predict, decide, execute. So I start off on my higher time frame and I look at a price chart. And let's say that price action has just broken and closed above a previous level of structure resistance, right? So it made a new structure high, right? That tells me, right, if price action creates a new structure high, then I predict a continuation higher. So at that point, I'll look for the next level of structure. Maybe I'll put some Fibonacci's on there, some harmonics. We'll keep it simple. I'll look for the next level of structure, and that will be my prediction on where I think price is likely to go next. So right at this point, just by doing those two simple steps, I know what price has done, and I have a level on where I think price will continue to. The next question is, well, how is price going to get there? And if we're looking for a continuation, well, there's only two answers. Price can just continue to rally up and go straight to that next level of structure resistance, or it can retrace back into the previous level of structure resistance, which should now act as support. And this would be something called a pullback trade. And the way I would be looking to get involved would be to look for that pullback, right? So look for the market to retrace down and then look to buy it up in advance of that next move. And I can create a very specific strategy that says if price action retraces back to structure support, then I look at RSI. If RSI is oversold, and I have oversold defined specifically, of course, then I look for double bottom. If price action gives me double bottom, then I look for bullish divergence on the RSI. If I have bullish divergence on the RSI, then I enter next bar market. If I enter next bar market, then stops go 10 pips below the double bottom lows. Targets go at previous structure. something like that, for example. But you hope you can see it's very, very, very specific. Whereas if I were to give you that strategy, right, or anybody, you should be able to follow it without question. And that's how specific we want our trading plan to be. You should be able to give your trading plan to your grandma that knows nothing about trading, and they should be able to follow it.
Right. And I see, however, the only problem with this is maybe identifying the highs and the lows and the swings and the zones. Is this something that you see people struggling with at first? Because it's something I started doing a long time ago, and I feel like it's natural for me, but for some people, it's not really natural to identify zones and draw pullbacks and stuff like that.
Yeah, I think it is. And it goes back to many traders aren't actually learning how to trade. They're just looking for the strategy. And a lot of traders get involved in the marketing. And I was the same way. I got involved because I heard that you can make a lot of money really, really quick. But a lot of traders get involved, and the first thing they want to do is they want to find a strategy that makes them money. I don't care about learning how to trade. I want to find a strategy. I want to learn how to trade this strategy, and this strategy will make me money. Where the real key of trading, and no matter what strategy you trade is going to be important, right? Or no matter what style of trading you are, it's going to be important, is you need to understand the foundational issues of how to read a price chart. And so many traders skip over that level. So many traders don't see the importance of being able to identify support and resistance, being able to identify extensions and pullbacks, because there's at the time, there's not a direct relationship from them knowing that to them making money. And with a lot of traders, newer traders, the goal is to make money, not to spend hours and hours and hours in front of a chart learning how to trade. But you think about it like a house, right? Trading is like a house where everyone wants the nice looking house. You want the nice living room, you want the nice bathroom, the nice kitchen, the nice man cave, right? And that's all good. But the most important part of your house is the foundation. If you don't have a solid foundation on your house, eventually that house is going to crumble. And who cares how nice your bathroom is or your man cave is if it all falls apart a year down the line. So as traders, you want to spend the right amount of time establishing a solid foundation. That's just knowing the fundamental elements of technical analysis. You want to spend your time doing that. And once you have that solid foundation, you're going to be able to build whatever you want in the rest of your house. So it really takes a shift in mindset to saying, hey, I don't want to make money as quick as possible. I'm going to dedicate this much time to learning and really treat myself like an investment, where I'm not going to see the return right away. But if I sit for 6 months and I learn and learn and learn, we're going to see a massive return down the line, where those other traders, well, they may get a short-lived return in the beginning and then blow everything.
And I think even past that point, like, you still have to spend time to learn and to practice and whatever backtest. So I still backtest myself a lot, like just for the fun of it and just to practice and become better. And you mentioned earlier that you were spending a lot of time on kind of still learning and becoming better. So how's your time spent, and what do you do to become a better trader right now?
I spend time in the gym, and I call it, I'm a big sports nerd, so everything is going to be sports related with me. But like you said, I do the same things you. I spend time in the charts. Like I love being in the charts. So I do a massive amount of analysis during the day. I don't trade too long. I'm not sitting in front of my charts for 10 hours a day, but I make sure to do a full round of top-down analysis each morning. I make sure to I run a live trading room, so I have 3 hours of lower time frame analysis during the day. And what's cool about the lower time frame analysis is it's basically the market's on speed, where it's like, the market is making the same type of moves on the 5-minute chart as it will on a daily chart. You're just getting so many opportunities, so you can see so much more in a short period of time. And then I do a full trading day review, where I review what I did, missed opportunities that I did take, opportunities that I wasn't allowed to take, but would have liked to take. And then I spend some time at night as well doing a post-market analysis. And well, if I have any free time aside from that, I'm like you. I just like to bring up a random chart and just do some technical analysis, draw some lines. It's really, I'm a gym rat. So, just like you're like a famous basketball player, I'm the one that's in the gym early in the morning, getting my practice in shooting. I'm the one in the gym early at night, practicing my skill, because I'm a firm believer in trading is a skill, right? We're not born with this. It's a skill that could be trained. And the more time you spend training that skill, the better you will become at it.
Yeah, wonderful. And if you guys have any questions for Akil, make sure to comment below. I think the best videos are the one where people ask questions and they interact. So comment in the chat. I'm monitoring the chat all the time. And you guys have probably seen, I think it's going to be on your left side of your computer or your screen. Akil, it's just in tier one trading. So can you tell people what that's about and what they can maybe expect, maybe not, but go ahead with that.
Well, Tier 1 trading is a new venture that I have going on in 2018. I'm going to be partnering with Jason Greystone, who was a former student of mine and went on to be an educator at Trade Empowered. And really exciting about it. We've got some very innovative stuff coming. We mentioned this earlier on today in our Q&A, but I'm a big believer in support in community. I think people need to be around other successful people to stay motivated, stay encouraged, and really be able to get the best out of themselves. So there's going to be a massive amount of education. I've got a course that I've been working on for the last year that I'm ready to unload on the world. We've got some pretty neat community features going on, and I haven't been this excited in years about something. So I'm very excited about what's to come. I can't tell you any details right now, but if you're signed up, you can go to the tier the number one right now, trading.com, and sign up. And as soon as we get some information ready for you, we'll shoot it out and let you know how you can be involved. But early 2018, it's going to be some big stuff, and I'm beyond excited about it. I wish I can tell you, man. I wish, but I've been sworn to secrecy.
It's all right, no problem. And what would you tell people who are debating whether indicators are right? Because you hear people in the trading industry, like traders, coach, whatever, telling that, let's say, the RSI is crap or doesn't work, or that this indicator is bullshit. What would you tell those people?
Well, personally, I use the RSI, so I'm personally offended by whoever said that. Personally. I think it's a difference in philosophy. It's the same battle as fundamentals versus technicals, right? You're going to get people that say, hey, fundamentals are BS. They don't work. Don't pay attention to them. You're going to get the fundamental traders say, hey, technicals are just this black voodoo magic. Leave them alone. So it's difference in opinion. Where I'm at in my trading right now, I've got enough experience where I've accepted the fact that you can be profitable in basically any way possible. I mean, if you guys have read the book Market Wizards, there was a guy that was using astrology, right? Astrology to to predict, and he was one of the best traders ever. So there's many ways that you can be profitable: indicators, non-indicators, mechanical systems, discretionary trading, fundamentals, technicals, a combination of both. So I don't want to get into battle saying it's crap or not crap. I would say this: if you're going to use indicators, I'm a very minimalistic guy when it comes to my charting. I use a single indicator. I use the relative strength index, the RSI. If you're going to use indicators, right, don't use 10,000 of them, because you'll be like me back in the day where you have more indicators than chart, right? Your chart's this big and this much is taken up by indicators, and you're waiting for all 13 indicators to line up and point the same way, and that's never going to happen. So use a small amount of indicators, but I think the bigger issue is know what your indicator is telling you. Know the information. So many traders use indicators. They don't actually know what their indicator means, right? So know what your indicator means, use it in that way, and understand that, yes, indicators are lagging. That's why I prefer price action, because price is going to tell me what the market is doing before an indicator can. So I've never been a believer in like, hey, wait for the moving average to cross to tell that we're in a bearish trend. Well, no, I tell that we're in a bearish trend by the last candlestick. Moving average didn't cross till 3 bars later. But I think you can use them in conjunction with your trading style as confirmation. And that's how I use the RSI. So I develop an opinion based off price. And then if I'm using an indicator, right, I use that as a clue. And our job as traders is to really just put different clues together, whether it's an indicator or a Fibonacci or a structure, and put it all together to try to find the best trading opportunities.
Yeah, and I think it's always like, when you understand that trading is a game of probabilities, and that's the only thing there is, like there's no problem with whatever you use, and that's the only thing that counts, like your result, and not like what you use necessarily, and not like how you use it necessarily as well.
I'll tell you, look, if anyone yells at you for trading a certain way, they're not a real trader. That's the way I put it. I've never seen a successful trader tell another trader that they're trading the wrong way.
Yeah.
If their mind is that closed off, it tells me that they most likely haven't seen trading success, and they're probably a fraud.
Mm-hmm. Roland says there's a lot of trap traders in the market these days. How do you think that happens often in the market to have trap traders?
Trap traders as far as the market trapping traders?
I don't know. I guess maybe Roland, you can just maybe clarify this a little bit. We have Dennis who says, what stop loss would you suggest to use?
Say that one more time, that last part.
What stop loss would you suggest people to use?
Some type of dynamic stop loss. I'm not a big fan of the set pip amount, saying like a 10 pip or a 20 pip. It's something dynamic because, again, each pair is its own personality. Each pair has different levels of volatility. If you look at, say, the average true range, right, there's a big difference between the dollar Canada, which on a daily chart may have a 50 pip average true range, meaning that's the average amount, that the average range that it moves in, versus a pound yen, which may have a 200 ATR. So, using a 20 pip stop on both, obviously a 20 pip stop on the dollar Canada that has a 50 pip range may be too big of a stop loss, where a 20 pip stop on a pound yen may be too small. So I always advise using something that's dynamic to not only the pair that you're trading, but to the opportunity that you're trading as well, being how big or how small the trading opportunity is. So I like using an ATR-based stop. I have some strategies where I'll use Fibonacci-based stop as well. But as long as it's dynamic to the specific situation and not just I'm going to use a 10 pip for everything. Unless you test it and it comes out profitable, but I think it's a bad idea.
Yeah. And I've had trouble myself because I've tested some strategies where the stop loss was based on the ATR, but I just don't like it. For me, it has to be on the chart on a specific level.
There you go.
Like based on the structure. So yeah, I'm just like that.
Yeah, I'm the same way. If I don't have structure there to protect me, or at least give me a level where I feel protected, I won't take the trade. I won't do it.
Yeah. Easy question here from Tony. No, from Richard.
Tony.
To use a mental stop or a hard stop?
Always a hard
on the
stop.
platform.
Always a hard stop. Now, if you're an investor, I come from the investing world first. There's not a problem with a mental stop, but understand investing and trading are two completely different beasts. As an investor, you're buying and holding. So, you're holding on for something for months and years at some points. Trading is different. You always want to have a hard stop. I've never understood a trader that doesn't use a protective stop, because always use protection. I won't take the joke any further, but bad things can happen when you don't use protection. And why put yourself at that risk? Why put yourself at risk where the market could put in an extreme move? Think the Swissy from 3 years ago. And even in that, you're going to get some slippage. But why put yourself in a situation where you can lose more than you're willing? I think on each trading situation, you need to define your risk. You need to have an amount that you're willing to lose. And, once that amount is, once that level is hit, right, you need to be out of the trade and just accept it for what it was. But definitely, I always think hard stop. I don't believe in mental stop unless you're sitting at your computer and watching it tick by tick with your finger on the trigger. That would be the only other way.
And even then you have to be really
don't worry about your broker's not stop hunting you. That's the big thing I get. Well, my broker knows where my stop loss is, and if I have it on my screen, then the broker's going to know where to push the market. And let's just be honest, no one cares about you, right? Your broker doesn't care about you. My broker doesn't care about me. No one's stalking my screen looking for where my stop loss is. That's just not happening. So I don't think we need to worry about that.
Yeah, cool. Wonderful. What are your thoughts on Bitcoin? This is Dale.
As a trader, I wouldn't touch it with a 10-foot pole. It's way too volatile. It obviously, if you bought it, you're doing well right now. But if you look at the chart, the volatility is just out of control, and it's not worth the risk. And this is coming from someone, again, I am a full-time trader. So, my family eats, my mortgage is paid based on how I do in the market. So I'm always less risky. I would much rather stay out of something than have any chance of blowing a massive amount of money and not being able to do what I do. So as a trader, I would say stay away from it. If you're an investor, this is tough. we're at the point right now where I personally wouldn't invest in it because I don't like buying at the highs. That's just not right. And it seems like we're at the highs, but then again, if you look 4 years ago when it was down at $200, well, we thought those were the highs as well. So it's tough. It's if you're going to buy it as an investor, I wouldn't trade it. If you're going to buy it as an investor, I would wait. I would wait for a sharp pullback. So maybe use your chart, find a level of previous structure resistance that's now support. Wait for a pullback and try to get involved at the cheapest price possible. But it's tough because the biggest fear I have is that we're going to top out at some point.
Mm-hmm.
The problem is I don't know when. I don't know if it's today. I don't know if it may be 5 years from now, and who knows what it can be at. So it's tough. It's just not worth the reward for me isn't worth the risk. And I always think risk first. So, but that's a tough question, man. I wish I had a better answer for you.
No, totally agree with that one. And I think for me, it's kind of having the lack of data. So you don't really know how your strategies are going to perform in this market.
Mm-hmm.
So, and yeah, for me, it's better to stay away and regret not getting into than investing a lot and then regretting to have put money in Bitcoin. So,
yep. If you don't trade it, you can't lose any money. And number one rule of trading is don't go broke.
Valid point. Yeah. What do you think about, this is NTV game. What do you think about trading with expert advisors or like robots?
I'm not personally a fan. If you have one that works and it makes money consistently, do so. I prefer to, and I did go through a stage where I was trading a mechanical system. It wasn't level 3, but it gave buy and sell signals. And I just didn't have the confidence in it. At the end of the day, me personally, I want to live and die by my decision. So if I enter a trade off a decision that I make and it loses and I lose some money, I'm okay with that because it was my decision. I'm not okay with trading something that's making decisions for me, especially if there are going to be some decisions that I don't agree with. And that's what happened when I used to trade some mechanical systems. It would tell me to sell, and I would look at the chart and I'd be like, nah, this isn't a good selling spot. But I would have to take it, and then it would lose, and I'd be like, well, I told you so. So it's tough. If you build out the system yourself, that's a different story because now you're building out the system based on your rules. So you're going to agree with what the system is doing. So that makes things different. I would say this. The warning that I have for trading EAs or any other type of system is that market conditions change and you need to make sure that your system is adaptable. Many of those systems are great in directional markets when the market is trending because they're momentum-based systems. That's the majority of EAs that you see out there, momentum-based. However, when we go through periods where there's no volatility like 2014, you may get destroyed and you need to be able to either adjust that system or adjust something. So just don't let it run and check it every 6 months, right? If you're going to let it run, you still have to stay in tune with it. You still have to make sure it's doing the right thing because systems make mistakes sometimes as well. And if it's making a very small mistake that you miss it, it may make that very same small mistake over and over and over again. That can cost you a lot of money. So you got to fine tune it like everything else and adapt it to the markets, in my opinion.
Mm-hmm.
I'm not poo-pooing it.
I've seen one of your posts on Twitter recently about kind of the holidays. And for me, like a long time ago, that was kind of an occasion for me to kind of get back and like get the profit I missed for the year. So, and I know a lot of people treat it the same way. So what would you recommend people right now to do like today or the next 2 weeks, since there's not going to be much volatility in the market?
I would just work on game planning for next year. Mm-hmm. December is horrible for me, man. So I'm the worst in December. I haven't had good luck in December since I can remember. So, for me, staying out of the markets is the best thing that I can do because I'm just going to blow money, just based on the lack of volatility that happens in December. But I would say, look, don't make your situation worse. If you're someone that spent the first 11 months of the year losing money, you're probably going to spend the last month losing money as well. So just, stop the bleeding and instead of trying to figure out how you can make it all back in these last few weeks, right? Save whatever capital you have, right? Use that to get a fresh start next year and spend this time working on what you need to work on to improve as a trader, right? As long as you have a chip in a chair, you can play the game. As long as you have money in your account, you can trade. So don't risk blowing it all. Sit down, right? Review your trading year, see what you did good, see what you did bad, see what you need to improve on, see what strategy you need to test or retest or, whatever it is that's on your to-do list, and spend a few weeks doing that. The markets aren't going to do anything spectacular. So there's really no point in trading them, right? Set yourself up for a great 2018 and use these next few weeks to do that.
Yeah, wonderful. And if you really want to trade all day, you open your platform, backtest something, and go to a couple of pairs every day, and that's gonna work. It's better. And that's what I'm gonna do anyway. So
yeah.
Cool. So any last word of guidance for people, or I think this has been great.
Yeah,
anything you want to leave people with?
I feel like I should have some words of wisdom for you guys. Focus on, go back to what I talked about the foundations of trading and try taking your mind off of the money, right? The way you become successful at trading is shifting your mindset to how can I make as much money as possible, to process over outcome. And if you shift to focusing on the process, meaning that you're following your trading plan, you're developing your trading plan and you're following it the right way, you're going to get the monetary returns. It's going to happen, but you have to eliminate the thought that a losing trade is a bad trade and a winning trade is a good trade. That's not true, because there's going to be plenty of good trades that you take that just don't win. There's going to be plenty of winning trades that you take that aren't good trades and will eventually blow you lots of money if you continue to follow it. So work on shifting your thought process to, hey, what I value as a good trade is a trade where I follow my trading plan, follow my rules of engagement 100% of the way. And what I value as a bad trade is trades where I don't. And if you focus on the process, it's going to help with the trading psychology, because you're no longer going to be hurt by losing blank amount of money on a trade. You're no longer going to be super excited over earning a certain amount of money on a trade. You're going to be so focused on just the process, taking good trades, taking good trades, taking good trades. And that will develop into a really, really good habit. And I promise you, if you consistently, if that becomes a habit and you consistently do that, before you know it, the money's going to be there. And you're going to be like, how the heck did this happen? So focus on the process. Don't focus on the result. And really set yourself up the right way. Set up your trading like a business for the new year and come out and be the most disciplined, confident person that you can be.
Yeah, powerful. I see this for myself as well. So if you guys didn't do it yet, just follow Akil on YouTube, and you can check out his tier 1 trading for next year. And I'm sure he's going to be able to help you out a lot. Thanks guys for watching. We appreciate it, and I'll catch you pretty soon.
Hey, thank you.